morning, good afternoon, good evening. No clue what time you're watching it. I know it's NFL Sunday, but it is 6:30 in the afternoon there on Sunday, October 6th, 6:30 in the morning over here. I'm having some terrible difficulties, not only for lack of sleep on the weekend, for having done one-on-one calls until midnight both days. But I woke up this morning and I have a piece of dust or some kind of something in my eye, and it is absolutely killing me. I'm a one-eyed jack, so I luckily don't have too much to cover, so we'll keep this quick and we will move on immediately as soon as we can get this done. I don't want that on the screen. I will start off with SPX, so I will start out as we always do with what is the bread and butter, which is the spreadsheets. Last week we had a green week, up 24.5 points. The week prior, up 26.25 points. As you can see, we've got very little to talk about. 5700s consistently now since that post FOMC gap up. 5700s consistently with the one big day there just Thursday where we got that close below 5700 by 6 cents. Getting a couple of dips down below 5700, but we're pretty well holding that 5700 range now, and we'll be going into 3 weeks in this range. What does it mean? Doesn't mean anything. All it means is that as we have been stranded on this 5700 island, you're allowing your 10-day, your 20-day moving averages to move up into where our price action is, which makes it very easy for us to be able to break down below them. At the same time, because we are in this zone for such a long period of time, it allows for your RSI to weaken so that it's very quick to get oversold. That's the reason why we got our bounce there on Thursday. So what do we got? What are we working with? Well, at least we didn't have any 30-point ranges last week. So God bless that. And as you all know, trading went fantastically. But now with 4 green weeks in a row, as I shared there last week, it's not illegal to have 4 green weeks in a row. It's just very uncommon. And as I shared on Friday, when we dipped down there 5702.83, almost filling the gap, they are not going to waste a red week with like some minus 5-point week. So, watch that 57.26, which was the weekly open, and as you saw, pushed it right through in that final hour of the day to make sure that, hey, look, we got a 25-point week. So I'll bring you on to what was shared, and I'm kind of familiar with already, but at least there's documentation to back it up. In the past 20 years, the second week of October has never closed with a green weekly candle during election years. 2004, 2008, 2012, 2016, 2020. So what it means is you're getting a green week this week. No. You've got your 4 green weeks in a row. Getting a 5th green week, obviously very, very unlikely. However, you don't have anything to do, really, until Thursday. Thursday morning, we get the CPI report. Thursday morning is what everything is going to be concentrated on and focused on, is Thursday morning. So, considering we have Monday, Tuesday, Wednesday, and then Thursday morning, I'm not really expecting too much to be taking place during the course of the week, unless what the FBI and everybody issued on Friday of the warning of violence to occur tomorrow on Monday, October 7th, the 1-year anniversary of what took place over there in Israel. I'm not expecting too much to be taking place during the course of the week, so you've got that. But I did share your spread for this Friday. Friday being October the 11th, looking for a red week to be taking place. So looking to be buying the 5760 calls, selling the 5755 calls. The monthly candle of October is still and will be for the entire month 57.57.73. And your CPI report is on Thursday. So This isn't something where you need to set your alarm and be able to get into this immediately when whatever trading platform you're using has the ability to be able to trade SPX options. Thursday is CPI. Again, not expecting much during the course of the week. So bring it on to QQQ. Again, same thing, doing nothing but trolling all this 480, closing above 480, holding on that 478, 477 consistently for the better part of almost 3 weeks now. And here was the nice little trigger, which the few of you that were asking, when can I get into QQQ puts? When can I get into QQQ puts? Well, Friday was your when you can get into QQQ puts again, as up to date, year to date close plus 20% on the QQQ. As you look back over there to July, when you started hitting into that plus 20%, right there, right around 487. 487 is your plus 20% level. You're up there. You're up there for a couple of days. And then, as you all know, as you got your drop there in August and down 16.25%, this is the area where you start buying your further dated puts. When you're right up there, when you're in that plus 487 area. 4 green weeks in a row. Again, same thing. Went up 1.5 points last week. God, my eye is killing me. Ugh. So on IWM, 2 red weeks in a row. Down 2.25 points over on the final week of September. And last week, down less than 0.25 point. Guys are killing it over there on your credit spreads. But you got 2 red weeks in a row over here. You got CPI coming out. And it's just a very quiet and kind of boring, if you're looking at it from a single leg calls and puts position. It's a pretty boring kind of market for you. But over on the spreads, absolutely crushing it. So I'm going to bring you over to the charts real quick. And again, being NFL Sunday, looking here so that you know, 5604.53. This is your September 11th low. We're looking here at a 15-day so that you can see everything in progress. And as we got that post FOMC gap up, with 5637 being the FOMC candle, the candle prior to 2 o'clock, your 5618 gap to be filled as we closed down on the day on FOMC Wednesday, 3 weeks ago this Wednesday, we still can't get into that gap. 5675 is the best that we've been able to do. 5675, 5675. Actually, we should note here where that gap begins. The gap begins at 5702.63. I'm going to go and put that down there just because that's where that gap begins. 5702.63. And that will be our warning level, because as you can consistently see, as we get these dips below 5702.63, we're suddenly getting a vigorous recovery coming off of it. 5-day, 10-day are inverted bearish. That will be changed because of the move that you had there on Friday. And your 20-day moving average will be moving up where it should begin being above where the gap is at 5675 in the very early part of this week. You got a little gap here down below 5700 to 5699.94, the close on Thursday. Little tiny gap up here above 5 points to 5762 from final day of September. And your big gap down here below, which again, we've talked about this over and over again for 3 weeks. So I really don't see the point on covering it over and over and over again. Over here on DIA, the Dow Jones ETF, looking at your September 11th lows. Big move to the upside, ba-bang. Over here on your spike up on September 27th, right on back down to that unable to break below 419 level gap. And here we are again, right at this big 423.77 Fibonacci extension with 420.72, what should wind up being where everything above that is nothing but risk. But here we are, 423.54. bring you on to the QQQ. And again, here you are with your big green circle right up there onto your 5485, 486. Hey, you're at the resistance area, and again, same thing. Unable to break down below that 478 level. Multiple little dips, little moves down to it, but you still haven't been able to break down below that 478. So for the short term, zoomed in view, 478 is going to continue to be your low, where your 20-day moving average is right now, which will be moving upward. And your 50-day moving average will be moving upward as well, which will be moving above your September 11th low, that being down there at 469.89. So, you know what? We'll zoom out because there's a lot of attention and a lot of transactions that take place on the QQQ for further dated out. Here's your 485, 485, 485, 485. Here is your 471, 473, 471, 473. This is just your gap going down to that 473. You've still got your move down here. No gaps to be filled, but that's your September. Zoom you out a little bit wider so you can see a bigger and broader picture, and that's where you go. So this is why we continue to have this looks as if an ABC completion has taken place. A failure needs to occur, and the failure needs to occur and start breaking down below 470, essentially down below 450. And then we can start saying that, yes, it has actually begun. But for now, as you can see, this is going nowhere for the better part of 3 weeks. IWM filled all the gaps, filled everything. Here's your September 11th over here. Came everything down, 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 right down, 50-day moving average. Pike! Friday, the euphoria and the move. And your move back on you guys trading the Russell. Couldn't have picked it any perfectly, trading that 2222. Sorry, the 2213, 2213, 2222 still above there. So you're looking really nice on that. You know what? I'll go ahead and put the Russell up. And there's your 2213 and there's your 2212. We're not able to get to 2212, but 2213 working essentially better than expected when you're doing your credit spreads, and you've got your big gap to be filled down here, which, you know what? I'll just go ahead and put it on since I want to shut my eye. And there's your gap to be filled from Friday. So that will be one that we will be monitoring and keeping track of. Anyway, moving over here onto the SPY. SPY, same thing. Your all-time high, 575. We're here at 573. You want to risk for the upside and you think that you have something that nobody else has, by all means, feel free to. But you've got your 575 best case scenario on your upside until you got a CPI report which can confirm or deny that we can get to 600, and you are unable to break down below 565. So right here you've got better part of 8 points to the downside, a little bit better than that, and you got nothing to the upside. So VIX, like Crush VIX on Friday, they did just that. That 20, like I said, very cumbersome, very worrisome, not being able to hold that plus 20, having been coming up and hitting it and resisting it. But we held above 1845 on Friday. And as you can see, the move up there at the end of the day there on Friday, back up above 19, something's still brewing. And the visit down there to the 50-day moving average and bounce right off of it there on Friday. Again, something's still brewing. Something is still brewing as we're heading into the election period, which that's going to get interesting as the rest of this next 5 minutes, 8 minutes goes. So this Friday is earnings. Earnings start on Friday, and JP Morgan will be reporting earnings on Friday prior to the opening bell. For those of you that are aware, those of you that were around, JP Morgan is my bitch. I don't recall, but I will find it. I should have it so that I could have it in here. I have it in other videos where on the January earnings report, after the report came out, Friday morning, we played the Friday, essentially 0 DTE puts. And if I recall off of memory, they were 2,200%. JP Morgan will be reporting on this Friday, and for me, I still see everything above 207 as being fake 217.26 having been what should be the absolute top. But we still need to get that breakdown down below 193. And when we zoom out here, and you guys remember having been in that JP Morgan trade that we were in, when we got this drop over here back on September 10th, we took off 180, 185% on the trade itself. And JP Morgan has gone absolutely nowhere for the better part of a month. Come out here on a 30-day. Here you are. We'll remove these studies. Ding, ding, ding. Give me a second. You know what? Fucking remove all study. Or I'll just put on the 50-day moving average. There. JP Morgan back up to the 50-day moving average, which is inverted bearish above the 10-day moving average, which is above the 20-day moving average, with the 5-day moving average being down below that. And all of that move having taken place there on Friday. This up here at 211. This is a 30-day view that we're looking at here. We'll zoom out onto a 90-day view. And as you can see, it's been supporting on this 200, 201, or sorry, 209, 210. Started resisting it a little bit, but you're still not getting any kind of a breakdown down into that 193, 187 area, which is what we had projected for where the drop should be heading out to. So JP Morgan reporting on Friday. Get ready for it. We're going to be doing a 0 DTE on Friday morning on JP Morgan, and it will not be a call play. That's all I will say on that. So I end you off with this. And this is a 5-year chart being able to look at the COVID lows of a stock called ALB. ALB. So I bring you back onto our web browser. Hurricane Helene, Tuesday, September 24, made landfall through my birthday, September 29th. You may be filtered where you are not getting or you don't want to have what's happening with Hurricane Helene in North Carolina. But for those of you that do, I'd like for you to be aware of what has been circulating around, and it's very, very, very transparent, able to be seen by everybody. On September 24th, Charlotte, North Carolina, Albemarle Corporation, ALB, global leader in providing essential elements of mobility, energy, connectivity, and health, has submitted several state and federal permit applications for the potential redevelopment of the Kings Mountain Mine, one of the few known hard rock lithium deposits in the U.S. development, over there in the affected area of the Hurricane Helene. A lot of people have looked at this and seen how there's a lot of discussion on how it was man-made, this hurricane, with the computer-generated lasers, which, if you look back at what they did in Dubai over the summer, the shit's for real. Dubai doesn't get flooded. It got flooded. So, again, this company, based in Charlotte, North Carolina, lithium, bromine, and specialties and catalysts. Largest provider of lithium electric vehicle batteries in the world. I don't have it on here, but I did do a little bit of research, and I can't actually put the two pieces together to show it that, yes, it is. But Kamala Harris's husband has essentially all ETFs with Vanguard and BlackRock that are dedicated and focused essentially into the direction of this company here, Albemarle Corporation. Then you come over here onto what's being going on around FEMA. $750 disaster relief. It is not a $750 handout. It is an upfront, flexible payment. And when you go through and there is more than enough adequate, transparent, data out there that you can go through and you can look at. You may know somebody over there and you can ask. The fine print reads that if you do not pay that $750 back within the course of a year, they have the ability and the right, the privilege to be able to take your house, your property. So I go back onto the charts, and I will bring you on here. And this is ALB, and we're looking at a weekly coming off of the COVID lows up to the all-time highs, which were here in November of 2022, which is where most stocks all topped out on the NASDAQ, and you're better than 200-point decline down to 74 earlier this year. Then I come on to the weekly. And as the week began, as you see, trolling along right here in the 90s, 93, and then suddenly here on Thursday, after a couple of reports came out about what was going on, kaboom, straight on up here to 100, 103. So the dogs are getting active. We really have nothing to talk about. We've really gone nowhere. We're still not going anywhere. We have CPI coming out here on Thursday. Enjoy your Sunday. Enjoy everything that you got going on today. And more importantly, enjoy your life.
We'll get your stand mixer, dough hook fixture, just 4 ingredients in this mixture. Add flour, yeast shower, add salt and then add warm water. Now stop the mixer once it's sticky. Remove the bowl and cover it quickly. Sits for 3 hours, put dough on flour. 45 minutes, bread can be devoured. Make your bread. Half hour, remove the lid. Make your bread. 8 more strings and look the best.